Okay, let me throw you into a trading scenario right away. It's FOMC rate decision day and Powell is about to get to the microphone. Basically, the context is that the Fed hiked interest rates by more than 500 basis points in a span of about a year or so. Now, once again, Powell has all the attention at this meeting. We all want to know if he thinks the Fed needs to hike more or not. So here he is, and there's something interesting in the introductory statement, but nothing that hasn't really been said on the text release that the Fed publishes 30 minutes earlier. So now it gets to the interesting part, because Powell now takes the questions from the press, and in this press conference, keywords like higher for longer and fewer rate cuts, they dominate throughout. Now, if you know something about fundamentals, you know that we call that hawkish, meaning that the sentiment coming from the Fed is hawkish, and hawkish means for the dollar bullish. So we briefed the private network with our thoughts on the matter, and now headlines from the major news outlets are also into the wires too. Bloomberg is on the same page. Hawkish it is. Powell and the Fed basically are saying that there might be another rate hike ahead, and on top of that, they also want to keep rates higher for longer. Alright, now, purely based on that, what would be a potential trade? Now, we talked about the fact that the sentiment coming from the FOMC was hawkish, and hawkish for the dollar means bullish. So in this case, obviously, the trade is dollar longs, right? Of course. So we look through the charts to see what dollar pair gives the best technical setup to position in that direction. Because, it's not just fundamental analysis. We also look at price action, the best risk reward, all that kind of stuff. So here he is, and now we just wait. After that, more headlines come from Bloomberg, and they're all still hawkish interpretations, which is great. So now the next step is to just let the trade play out. The sentiment is clear, the bias is clear, the forward guidance from the Fed is clear. So now we just let the trade play out. Now, what I want you to understand from this is that the flows happen after an important FOMC meeting or an important fundamental event like an important economic indicator are what matter, because think about it this way. First of all, there are macro traders that start positioning according to the latest sentiment, in this case to the latest forward guidance from the Fed, but it could be an important economic indicator that shapes the context in a certain way. Now in this example we talked about the Fed, the sentiment was hawkish, and that meant bullish for the dollar. So the second type of flow to keep in mind are the traders that are on the wrong side of that sentiment. What they do? They start closing their positions. Think about it this way. What happens to dollar bears if the context is now bullish? They have to cover their positions because they are on the wrong side of the sentiment now. So what they do, if a short closes the position, what it does, it buys back. So either by hitting the stop loss or by closing the trade manually. So with these two type of flows, what happens? We have dollar bulls heading to longs because the fundamentals are in their favor. And we have dollar bears squaring their shorts, so naturally they're buying the dollar as well because they are on the wrong side. So these two type of flows, they create a trend. They let the market move in the direction that was specified and that was guided from the sentiment coming from the Federal Reserve meeting. Now this trade we also shared on our public Telegram channel as well, and there it is. That's a real trade based on real fundamentals. That's the kind of fundamental trading in Forex that matters. So with this said, what's the core of this whole process? So let's simplify it for a second. Let's think about this as fundamental analysis in Forex about understanding the sentiment, right? Yes, market sentiment, fundamental context, macro context, they're all the same things. So fundamentals are the sentiment, and the sentiment is a product of the fundamental context. Let me rephrase that in more simple words. If the market is trending, that means there is a specific sentiment, and that sentiment is a product of a specific fundamental context. Now, why is that important? It's important because if you understand that context, if you understand the story that is driving the trend, that is driving the market in a certain direction, if you understand that, you can analyze and evaluate whether that story is likely to continue or not. This is a simple and effective way of thinking about fundamentals. Now, it might sound easy, probably it doesn't, but definitely it's not something that you can learn overnight just by watching a couple of videos. No. It's something that you have to learn from real trading with real experts that build experience, that show you how it's done. So if you like this kind of professional way of doing things that both builds your experience and also gives you good trades to follow, then you can follow us on our public Telegram channel, and you can find a link about that in the description below. Now let me add another very important thought about the subject, because I feel it's important to say and explain the fact that when it comes to fundamental analysis, it is extremely important to keep in mind that the quality of your fundamental analysis is directly correlated with the quality of the information you get. Of course, if you get the right information, you make the right analysis. It's obvious. So that's really the most important thing that you can understand about the subject. So the point is to make sure you follow the right sources, the right traders, the ones that really make the difference in your trading.